So as we mentioned, gold falling for a second day in a row as the White House strikes a very different tone on the Federal Reserve independence. And investors took in Donald Trump's comments on trade. Now, the precious metal still up by about a quarter this year. How can investors play what's going on? Let's go to Justus Parmar, CEO at Fortuna Investments. Thanks for joining us today.
Good afternoon, Marilla. Great to see you.
You still see gold rising, maybe hitting 4K by the end of the year. What are you factoring in there?
Yeah, I think the long-term fundamentals for gold are extremely strong. We anticipate for the commodity to actually have a 4 handle on it within the next 12 months or so. I will caution or caveat that, we've run really hard. The commodity's up 35, almost 40% in the not too long past of ours. So, a couple of things. One, I think the central banks will continue to buy gold. I think India, I think China, I think the cat is out of the bag in a certain way. If you recall, Marilla, a couple of years ago, back when we had the COVID crisis and the central banks, they flooded the market with the money supply. We printed 40% of the cash. Gold actually didn't move at all. It was stuck. It was actually Bitcoin that basically stole a lot of the thunder. A lot of the capital inflows went to Bitcoin. And so during this next iteration, what we're seeing is actually become that safe haven that we thought it was going to be 5 and even 10 years ago. It's been a flat decade. I think there's a lot of great catalysts coming up here. I would just caution the viewers and the investors, though. It's run really hard. I would wait for the pullbacks to potentially deploy new money. Okay,
so talk to me about where you see a pullback. What do you think it'll get down to? We're down to about 3.3 at this point, down $122 today.
Yeah, I realize. The elephant in the room is this. The elephant in the room is anytime there's some really, really good news out of the U.S., i.e., being we've got I'm down here in the U.S. There's a huge delegation of folks. The vice presidents in India yesterday. These guys are traveling the world. They're desperate to get these trade deals done, and the framework of one deal even getting done. I think once you start to see these deals getting done, I think inherently it's going to inflate the price of gold temporarily. Not long term, but I think temporarily. And so I guess the caveat is I can't give you an exact price, but I'd be very mindful of some of these great deals that are probably going to happen over the next 30, 60, 90 days in the U.S. here on the tariff front. Okay, so we might get news on the tariff front, but I'm just wondering how much stock you're putting into the deals being done, because what we've heard is there could be discussions, there could be negotiations, but it's likely that any solid deal could be as much as 18 months away. Yeah, the implementation, it's going to take, years for these things to really flesh itself out. But there's been, Marilla, there's been so much uncertainty in the markets, right? And so even the snippet or the sniff of, hey, India and America agree to a deal in principle, that alone is going to eradicate a lot of the fears or nervousness of these things. So even what I'm saying is even the framework of that is going to help the U.S. equity markets and potentially take some gas out of the gold market. That said, the long-term fundamentals of gold are still extremely strong, and we do predict it to continue to perform over the next 12 to 18 months. Okay, so Justus, if investors do want to put a stock or play for gold, how do they do that without going into gold itself, considering the price? Yeah, look, us at Fortuna, we're top-down investors, right? So we need to understand the industry. If we like the industry, we try and pick off the best and the brightest. We still have a lot of torque in our portfolio and the thesis that we run by. We look for disruptive companies. That said, in the gold industry specifically, names like Agnico Eagle, that's a great name. They've got great mines in Canada, in Mexico, in Australia, Finland. They've got a great portfolio. They're all in cost of production, I believe, is in and around $1,200 at a $3,000 handle or a $4,000 handle. All of a sudden, these economics start to look really, really strong. I would also mention the last quarter just came out last week. They produced something like 850,000 ounces of gold. So this is a juggernaut. And so, I think it's imperative as you're constructing a portfolio to own very, very, very solid, high quality names like that. I think if you have the risk appetite for it, it sounds like that the viewers here are quite astute, and they certainly do want some torque in Canada. I think that names like a section like the advanced developers of gold companies. They haven't even moved really. So I would start to explore those areas. There's a lot of companies you actually want to stay away from in that arena as well, but you've got some great banks like Canaccord and Haywood and folks like that who've got great coverage on some of these smaller companies that are well capitalized, great CEOs that haven't necessarily moved the same way. And so I'd factor that all in. And I'd just add one last point. We've been backing a company here in the US. It's got a nuanced take on gold. They're producing gold from TVs and circuit boards and electronics and things of that nature. They're starting to actually produce gold from that avenue. Us being a VC firm and disruptive, we're very open to ideas like that. And that particular company is going to be listed on the NYSE this year.
Interesting. All right. Let's flip over and talk about the election in so much as how it will affect the future of mining and development in Canada. Do you see mining development? I mean, Ontario already made a big announcement. It wants to get rid of some of the rules and regulations and get the Ring of Fire going. But do you see the results of the election leading to better mining opportunities in Canada?
Well, Marilla, I do think it's been underreported that I think if I don't want to get political on this channel, but I do think if Pierre Poilievre is able to get in, and our internal polling dictates that he will within the next week or so, I think he's going to be exceptional, not only for the economy of Canada, but certainly the mining industry. He's going to deregulate a lot of things. He's going to turn mines on, refinement, the pipelines. I mean, this is going to be great for individual stocks and firms and enterprises in Canada. We've seen an example of it down here in the U.S., whereby they just announced their first 10 projects, which have been stuck. These 10 mining projects have been stuck for years and even decades, whereby the administration, with the stroke of a pen, has actually just greenlit the permitting for these things. And so I think that the platform up there with Pierre Poilievre isn't that distant from exploiting these resources. And I think that'll be great for the economy, the individual names in the marketplace as well.
Okay, I do want to get you on critical minerals as well, because you're bullish on that. And I'm just wondering, when you're factoring through all the trade and tension, the tariff war, what are you seeing?
So, I mean, our mandate at my firm, Fortuna Investments, we've kind of been ahead of this for the last couple of years. We've been really focusing on onshoring. The great news is this is something that Canada and the U.S. certainly do see eye to eye on, is onshoring these critical minerals. As I'm sure you know, you cannot make an F-104 fighter jet, you cannot make a submarine, you can't make an iPhone, you can't make any level of electronics in this modern economy without these rare earth minerals. And China controls 90% of the supply. If China were a company, they'd be shut down as a monopoly. For some reason, they've been able to absorb this entire ecosystem, and that's not sustainable. And so I really like American assets, North American assets. I think this is the beginning of the golden age, the golden era. As long as we can get the permits and the development, the capital will flow. And so areas that are critical to our economy, such as the rare earths, there's only the one producing mine here in the US, which is MP Materials. It trades on NYSE. It's almost a $4 billion company. That's the only mine of rare earths in the US. We've been backing a project which we hope to list on the NASDAQ at the back half of this year, which looks to be the second producing mine in the country. So we love setups like that where the country needs it. There's great assets here, great assets in Canada. And if we can help to supply the supply chain and the ecosystem, that's totally a home run.
Justus Parmar is the CEO at Fortuna Investments. Justus, thanks for your time. Appreciate it.